For more than 2 decades, the world's most valuable aerospace company operated as a private fortress. Now, under the ticker SPCX, SpaceX is traded on the open market. Management bypassed the standard book-building process, setting a fixed price of $135 per share to raise $75 billion. That pricing places the entire operation at a $1.75 trillion valuation. This listing marks the climax of the 2026 tech IPO wave, transferring a massive concentration of capital from private venture funds into public markets. The math of that valuation pushes the founder's personal net worth past the $1 trillion threshold. To meet investor demand, underwriters carved out 30% of the available shares, specifically for retail investors, 3 times the standard allocation for a tech debut. Those buyers are pricing in an Elon premium, betting on a track record of forcing impossible engineering goals into reality. The company's dominance begins at this coastal launch complex, where the infrastructure for modern spaceflight is now concentrated. SpaceX vehicles now transport 80% of the world's mass into orbit. By successfully landing and flying the same boosters repeatedly, the company removed the traditional expendable costs that previously defined the industry. This launch monopoly creates a captive, in-house pipeline for the company's satellite and artificial intelligence divisions. This diagram shows $18.7 billion in total revenue for 2025. Starlink accounts for 61%, or $11.4 billion. The network has grown to 10.3 million active subscribers. Average revenue per user stabilized at $81 a month, even as service expands. Starlink is currently the only division that reports a profit, carrying the weight of the $1.75 trillion valuation. Following the merger with xAI, the company's focus expanded toward building global computational infrastructure. The Colossus data center was built in 120 days to house 220,000 NVIDIA GPUs. That hardware scale secured a $40 billion contract with Anthropic to provide computing power at a rate of $1.25 billion per month. Public markets value the company as the physical backbone of the next generation of artificial intelligence. Even with those contracts, the IPO trades at 94 times revenue, while the consolidated company reports multi-billion-dollar net losses. This chart compares the $135 IPO price against Morningstar's fair value estimate of $63 per share. That $72 gap represents the option premium, the price investors are paying for the possibility that the company will successfully commercialize the Moon or Mars. This pricing leaves no room for operational setbacks, transforming an industrial business into a speculative stock. The build-out of AI infrastructure is currently consuming $2.5 billion in cash every quarter. Shareholders have little say in these capital allocations. A dual-class structure gives the founder 85% of the voting power on just 42% of the equity. Public investors are funding a high-burn AI expansion with no direct control over how the capital is deployed. A lockup expiration is scheduled for December 2026. At that point, early employees, venture capitalists, and the bank syndicate will be eligible to sell their shares on the open market. SPCX is a technological monopoly, but it enters the market with one of the most aggressive valuations in history. Whether the revenue can ever grow to justify that price is the $1.7 trillion question.